Welcome back again to See Today Business with me, Alin Wiratmaja, and we are joined by online trading Sukor Sekuritas head Daniel Wiguna. Good morning, Daniel.
Good morning, Alin.
Yes, looking good. You too. But the weather is not really good, right?
Yes.
So we will discuss the market recap, of course. So what do you have for us today?
Yeah, talking about weather, it's not only the real weather, but if we see at the capital market also, we see a little bit turbulence because we see that the movement of our market is going on sideways. This indicates whether it's already everything's got priced in. The January effect is over, and we're still expecting a big sentiment by these months also.
It's different from what happened in the Wall Street though.
Yes, yes.
S&P 500 hit
right.
all-time high, but we
Because
didn't see that being translated to our
market. Yeah. So we expect that would be happen on March this year. But if we are talking about the US market, we see a little bit anomaly, a lot of things quite happening like in the pandemic era, because we see not only the stocks market in the US is going up high, but the gold price, the crypto price also, if we see their interest rate is also got high, got appreciated and really on a high level of interest if we see their interest rate. So usually if their interest rate is high, the capital markets will going on a lower level, but everything is going on appreciation level. So yeah, we see this as an anomaly. So learning from the COVID situation, we see this as something that we should be looking really carefully.
Extra cautious.
Yes, extra cautious, because after everything got appreciated up high, sometimes a big correction will coming up. So I think we should brace for something. Yes, of course. Both on every investment instrument, of course, we see.
Okay, so now let's have a review.
Yes, this is our review on last week market. So I only highlight two big data that we already see by last week. The first one is our trade balance surplus. So it would be around 43 or 44 months of our trade balance surplus, and we expect that this can be happening until our 48 months. So it would be like 4 years trade balance surplus.
So until first semester of 2024.
Yes. But we still see whether the commodity price is still on this level or not. So if the commodity price such as oil got lower to $65 to $60 per barrel, our trade balance surplus might got change into a deficit again. So because oil price affect a lot of other commodity price, but our coal price, our CPO price, our steel and iron price, I think they already got priced in their on their level, on their comfort level. We see it. So I think everything, and we expect that everything will be depend on oil price in this first and second quarter. We wait for what will happen in our global oil price. What will the war tension getting up? If it's not, then everything is still be okay. If it's got up high, then our trade balance will be got surplus in a longer time, maybe on maybe until the end of 2024.
Okay.
So yeah, this is a plus and a minus level. The minus level, the war tension got up high, and the plus point for us, yeah, we got we can got like trade balance surplus even more longer.
Okay then, and now let's talk about the Bank Indonesia 7-day reverse repo rate that is being maintained at 6%.
6%, yeah. If this keep happening, and Perry, what you said that they will maintain on this level until the end of 2024, it means we can already count or maybe calculate the profit margin of banking nowadays. So if this happens, of course, we will see that banking sector is really an interesting sector to look on. not only on the big banks, but the middle banks and the lower cap banks, of course, and also the digital banks. They can also have a potential to got appreciated or maybe having a bigger profit margin by this year. So this year, 2024, we see that this is a year of banking on banking sector, because the interest rate is maintained on this level until the Fed can lower their interest level for around 125 or 150 basis point. But we from Sukor Sekuritas project that there might be a possibility if the war tension got worsen abroad. The interest rate that can be cut by this year can be around 150 to 200 basis points.
So the
because
rate
it will
cuts will
push
be more
the inflation
aggressive.
level. Yes, it will push the inflation level, and it will push the Fed to slower their rate cuts.
Okay.
So yeah, that is the part that we should look on by this year for the whole 2024.
Okay, now for this week.
This week, sentiment review, we have two big data on our domestic data
Investment realization.
That we should look on. The first one is foreign and domestic direct investment data, and the second one is the money supply and the loan growth, because both of them got like a strong correlation in between to see our market abilities to fight the economic condition that will happening by this year. So the first one, our foreign and domestic direct investment got appreciated also. We are waiting for the fourth quarter data. We hope that it still can be appreciated, because we see that the third quarter it got appreciated by $3.3 billion. We hope that it can be higher on our fourth quarter. And also in money supply and loan growth, we see the money supply data got appreciated by 1%, 8.7. It got appreciated to 9.7. The question is, will the loan growth also got appreciated? Because on the November data, we see that the loan growth also got appreciated to 9.7%. The money supply got appreciated by 3.3%. So it gives a strong and good correlation. We hope on the December data, which this one will indicate how strong our economy, our banking sector, and the effect of the interest rate that happening on 2023 on full spectrum. So we hope that it can still got appreciated and got translated to banking sector in a better condition.
Okay.
So yeah, after this, we hope that our capital market also can still maintain the 7,200 level or 7,250 level on our index.
Okay, let's now look at the chart of Jakarta Composite Index. What can we tell from this?
So this part that we can see for this week, we have like a strong support level on 7,115 or to 7,164. This is a strong support level that we should look on for this whole week, because we see that on this side, this is our year-to-date movement.
Yes.
We see that there is a sideways movement already, which indicates the January effect might be over, but yeah, we still have to look on until the end of January, because in February we usually see that the market will getting lower than January. So we need to brace, we need to do our math also to see how much that we would spend on the capital market at this level. So
is it going up or going down?
Most probably we should wait and see first, because on our RSI data, the line is also getting sideways. We still calculate whether they will go up or they will go a little bit lower, but let's wait and see until which part will the index touch first. Is it the resistance line or the support line? Because our last movement is working on our moving average 20. It's in the middle. So yeah, it indicates a lot of investor who wants to see first, who wants to wait on another economic data, maybe from global or domestic. But from our MACD indicators, we expect that we might have that cross, yeah, in here, because it's going a little bit lower. The red line already wants to touch the blue line here. So if our market is going on a little bit lower, we expect 7,164 as the support for this week.
Okay, this is already giving a sign, right?
Yes, this part already giving a sign. So yeah, we expect if the same thing happened by this week, maybe our index will got lower than this.
So what strategies do you suggest to us in this kind of market atmosphere?
Maybe those investors who already have a lot of banking emittent in their portfolio, maybe they can have
realize their
profit taking a little bit, maybe 25 to 50%.
Yes.
They should do some profit taking on a big sector, and they might can do sector rotation.
To what sector?
Yes, to energy sector that already got corrected. Well, some of the stocks got already corrected or maybe we can find big caps emittent, big caps corporation, which is still lagging. As I mentioned 2 weeks ago, we still have automotive sectors, which still got lagging in their movement.
Disclaimer on, we still have lagging Astra International.
Yes, and also
for the big caps.
For the big caps, and also we still waiting for the movement of consumption sector such as ICBP or INDF that we are expecting, and also we're still waiting for the movement from telecommunication sectors and the tower sectors, which there is Telkom, there is Indosat, there is Axel, Axiata, and of course on the smaller cap, we expect that there will be a movement on front. And also for the tower sector, we expect TOWR, to have some movement, because most of this kind of big cap stocks is still got a little bit lagging on their movement. So yeah, maybe investor can switch a little bit from banking sectors to big caps emittent that is still lagging, the one that we talk about. But once again, disclaimer on.
Disclaimer on. And this is for what time frame? Or holding period?
Yes, holding period until March, until the end of
the first quarter of 2024. So for those who have floating profit quite significant in your portfolio because of your ownership of the big cap bank stocks, it's time maybe to realize some of your profit and switch that to some stocks which are still lagging despite their potential, as mentioned by Daniel Wiguna, head of online trading from Sukor Sekuritas. Disclaimer on. So this is for a time frame up to March 2024, the first quarter of this year, right? So, other than that, you also mentioned about the energy stocks. Which energy stocks? Because we have plenty of commodity stocks in Indonesia.
Maybe we can look on, or a lot of investors can see the oil sectors, like Medco, METC, So because if we see on Medco Energy, the movement is also still on their appreciation level on year-to-date data. So this emittent is quite interesting to look on because they have like 37 billion capital inflow already, and for their yearly data they already like accumulate 76.8 billion. So maybe this indicates a lot of foreign investors still look on Medco Energy. And also we see other oil sectors, oil emittent, that might be interesting to look on, which quite similar to Medco Energy. And other than oil sectors, we still see that the CPO company, the CPO corporation, is still good to look on also because CPO and coal is prone to our China trading dynamics, yes, because even though China is lowering their demand on our coal and our CPO, they still keep demand, still having a higher demand month by month. So this part we should look on, of course, because the price of coal and also the crude palm oil price is going on sideways also. So yeah, it indicates the stability of the emittent price also. So yeah, energy sector such as oil, CPO and coal is good to look on for investor if they want to switch their portfolio, because there is a stability around that level, around this level.
Okay, then thank you very much for sharing your insights, Daniel Wiguna, head of online trading from Sukor Sekuritas.